Okay, we're using their spare labor.
Exactly.
I'm
okay.
assuming, that might make an ass out of you. I mean, but I'm pretty sure that they are.
Welcome. You're listening to the best of investing on News Talk 910. Let me try that again because they want me to get rid of that. Sorry. Yeah.
Welcome to the red state. Yeah.
That might be the first. That might be only the second time you've stumbled in like
yeah.
150
You guys get
shows.
nervous, yeah. Welcome. You're listening to the best of investing on Talk 910. This is the show where we present valuable information about real estate, the financial markets, and other economic business of the day. And for those of you listening for the first time, because we have a lot of new listeners, here is our format. A few guys sitting around a bar having drinks without the drinks, unfortunately. Talking business with you, the audience listening in. I got a couple of great co-hosts today, so everyone listen up. A trio.
The Three Stooges are here today.
Nah, come on, you guys are better than that. All right.
The three amigos.
The three amigos. Yeah. I'm your host, Edward Brown, and I'm pleased to have as my co-host Mark Hanf of Pacific Private Money, California's fastest growing private lender, Jeremy Forcier of Guaranteed Rate, and Rick Warner of Keller Williams Realty. And today's trivia theme, since we started baseball season, is baseball jargon, because baseball season is now in full swing.
Nice.
Our website is bestofinvesting.com. Check us out on Facebook and YouTube by typing Best of Investing Radio Show, and we're also on television, Comcast Channel 26 and ATT Channel 99 on Saturdays at noon and Sundays at 6 p.m. All right, I think we should get right into email time. So let's start with you, Jeremy. Listener writes in, I have never heard of Guaranteed Rate before you appeared on the show last month. How long has Guaranteed Rate been around?
Great question. Guaranteed Rate has been around for 12 years. Was founded by Victor Chardelli. It's the single largest privately held mortgage bank in America. So
Really? Wow.
Yes, yeah, which is really awesome. We were just actually ranked last year as the largest privately held mortgage bank for fundings, and
How large would that be?
we did $17 billion in fundings.
With a B.
With the B, like Oprah, billion.
Yeah.
So very
like
large.
Oprah?
She's a billionaire.
She's a billionaire.
Oh.
Yeah. Sorry, you got to put the.
Not
I gotta
Sounds
sometimes,
Oprah
Rick.
starts with an O the last
And,
time.
and that's why Rick's a realtor.
You see how I check the details? Wait a minute, that doesn't make sense.
So so great company, owned by one person still. The other exciting news is that we are the 8th largest lender. Period. That includes Bank of America. That includes Wells Fargo, Chase, all the big guys. We are actually number 8 on that. And even more exciting than that is by J.D. Power and Associates. They rank these customer satisfaction surveys that they do. So
Yeah.
we use the same survey companies as Apple, Wells Fargo, etc.
Okay.
Mm-hmm.
And we rank 77% approval rating as an amazing experience, which is one of the highest in the nation. So
So what does that mean in terms of someone listening out there? What does that do for them in comparison to, say, walking into Wells Fargo or Bank of America to get a home loan?
it's a great question. So, and I always say it's a great question because you guys are so smart. So, the great news is we are a direct lender, meaning that we are Fannie Mae, Freddie Mac direct lender. We are truly underwriting, funding all this stuff with our own money. So that doesn't mean we don't have any overlays. So whatever the guidelines are by these big insurance companies that purchase these loans, that's literally what we underwrite to. So what does that mean to the consumer? That means a faster close of escrow, a smoother process, less paperwork, and ultimately a happy homeowner.
We like happy homeowners.
Very
So
good.
do I.
What kind of rates are you seeing now? Because I think rates didn't. I know they
went
Treasury,
down again, and then
yeah,
they went up.
They went up and down.
Well, yeah, it's
They're
like
bouncing
it's
on the
like ping
bottom,
pong.
really.
Yeah, they are. So we're right around 3.5% right now on a conforming 30-year fix. So pretty amazing stuff.
What about jumbo?
Jumbo, we're at under 4%. So depends on your loan amount. 3.875% is very common right now. Rick's raising his hand because he just got that.
No wonder the real estate market-
Very excited. Very excited, yes.
And he only has a 200 FICO score. No, I'm just kidding.
Yeah, that's true. Well, it's up to 200.
It's up to
right?
200. Yeah.
Hey, can I actually chime in on that whole
Sure,
thing
sure.
because there is this. I do deal with a lot of home buyers, and there is this kind of perception. Oh, I should go with one of the big banks, or I know this is the most common one. I should go with the bank that I've got my bank account at.
Right.
Sure.
Which-
'Cause of
which
course
I
they
do-
love me. They're going to give me the best rate.
Yeah, exactly, and that's just a total myth, And what ends up happening every time I get into a transaction where the buyer, unfortunately, maybe I've suggested.
Okay, hold on.
Mortgage
Did everybody
meltdown.
go down or
No,
just
I
me?
put it-
I'm down. Darn. Wow, that's the first time too.
Oh, you know what? Somebody unplugged it accidentally.
Exciting for the
It's just-
Comcast viewers.
Stand by for
Please
technical
stand by.
difficulties.
If Jeremy and I
I don't
kick in
know how to-
$10 each, will that work for you to get a new connection?
Ready? No, it's not doing it.
You can't start?
You know what?
Do we got to start the segment over?
Yeah, I mean, Rick, you're gonna
Yo.
continue on. Ready?
Yeah. Wait. Okay,
What I'll
so
do is I'm gonna
they
give
have
it
a
a few
myth.
seconds.
there's a myth, and it's a myth.
That you get the best rates from your bank.
Right.
That's
okay.
the myth.
Yeah.
Okay, so
So anyway, it's a great. So the consumer thinks that they're going to get a better deal from going with their bank, or that they're going to maybe qualify better, or whatever it is. And in fact, my experience is when I deal with any of the four big banks as a realtor, it ends up being a super challenge, and they have no real sense of getting the timing done. And that has been a problem, for us as realtors, not just me. So.
Jeremy, how fast are you closing loans these days?
We can close one. We have a 25-day guaranteed close.
That's cool because
That's amazing.
Yeah.
Yeah.
what about with the appraisal? I mean, how long does the appraisal take?
Usually 5 days. Yeah. So if we get a contract today, we can put an appraisal order in 2 day and get it back in 5 business days.
And Rick, we have an email that we received from a listener that says, "What advantage does Keller Williams Realty have over a larger brokerage firm?"
Yeah, and that's kind of a little bit of an ironic question because actually Keller Williams is one of the largest real estate companies in the United States, but it's an understandable question too because we don't have huge penetration here in the West Coast. Kind of started in the Midwest in 1983 and has expanded out, but we have about 80,000 agents across the United States, which is if it's not the largest, it's number one or number two, Coldwell Banker and a couple others. So the advantage is. We do have that kind of penetration from along, in terms of marketing across the United States. But honestly, the biggest thing, anytime you're picking out a real estate company, is really going to be more about the agent or the broker that you choose. I would say even there's great independent agents and brokers out there that are just as good. And
Not just as good as you.
well, again, there's some really great agents out there that absolutely are as good as me. The biggest thing is that you take the time when you're thinking about using an agent or a company, that you take the time to interview them, make sure that they're a good fit for you, that they have tons of experience, that they know how to maneuver in this market, get multiple offers accepted, blah, blah, blah. That's really the bigger deal, honestly.
So what is the value add of a franchise like Keller Williams or some of the other brokerage houses?
Well, for me, speaking for Rick right now, I would say that with Keller Williams, just like with Guaranteed Rate Mortgage, a lot of it comes down to the culture. What is their mission statement, and do they actually live that with their agents? Because that usually attracts a different type of person to the company, like Rick with Keller Williams or like me with Guaranteed Rate. I know that both of those companies are aligned similar in the sense that it's all about the wow experience for the customer. Not just what you tell the customer and how professional you are, but how do they feel? And I think that that's hard to articulate a lot of times to a consumer when making a decision, because you're not going to talk about how this corporate training is great that we have, but it makes a huge difference in the type of agent and what they're going to pay attention to during the transaction.
Well, and you guys have, even though you have different companies, you guys seem to tag team pretty well.
Yeah, we do. We're just like Randy Macho Man Savage and Hulk Hogan in the heyday of wrestling. That's what we do. So no, we work really well together. I feel blessed to have Rick in my life, and for anyone that gets a chance to work with him. It's always a great experience.
He's a pretty sharp cookie.
Yeah, we do, and we that teamwork that we have works so well when we're in the middle of a transaction because there's just the communication's crazy and getting things done, and we know what each other are doing, we know how to cover each other and all that stuff.
That's a very important thing, because a lot of times especially when you're getting overbids, multiple offers, it's really important to make sure that your banking situation and your buying situation is really tight knit.
Well, and aren't most of the best mortgage brokers like Jeremy working with real estate agents directly? And they're not out cold calling or waiting for the phone to ring. You guys have your team of agents that you work with, and you work well together, and you get transactions closed more efficiently as a result.
Correct. Yeah. There's a great quote that I read a long time ago that was, "Communication is the lubrication to every good organization." And I think that goes for even working with your clients, is that the more you can communicate, the better you can communicate. I know as simple as that sounds, it's hard sometimes to be a really great communicator. You're dealing with a lot of different personalities, you're dealing with a lot of different things that people may or may not understand during a transaction, and you have to have an open line of communication with consumer, agent, title person, banker, attorney, appraiser.
Yeah,
I mean, the
that's
list
true.
goes on and on and on and on. So I think really the best agents, yes, of course, good agents always want to go after realtors because people buy homes.
Of course.
But the best agents are awesome at communicating. And I think that's the big difference.
Okay, we're going to cut to our first commercial break. Here's our first trivia question. And again, the theme is baseball jargon. Hopefully you got a bunch of baseball fans around here. If a batter hits for the cycle, what is the minimum number of total bases he will achieve? All right? The first, you got to think about that one. Mark, don't worry. You don't have to take off your shoes and socks.
Yeah.
Okay.
Well, now you're giving stuff away.
Sorry about that. Okay, well, it's less than 20. How's that? Okay, that's a hint. And we'll be right back.
Clue number 1, it's a prime number. And throw everyone off.
All right, so
It's a prime.
It only includes one digit.
and somewhere between 4 and 6, but I can't narrow it down
Zero,
to all the facts.
because zero's not a digit.
All right.
We were just waiting for Mark to get there, but apparently
Apparently, Edward hadn't
Edward
hadn't
know.
there yet either.
was
I knew the answer.
bringing up the rear.
So I,
Well,
put
I
these-
just got too
I
many
had to,
things
I had to
going
put
on
these
here.
sunglasses on just so I felt
Yeah.
like I was in a safe place.
'Cause
Like,
I'm freaking him out.
So
Oh, don't freak him out.
I'm a loose cannon right now.
Yeah.
What's Mark's question so we can be prepared to follow up with quick questions?
Second mortgage.
Do I do second mortgages?
Oh, well, is that a long answer?
You know, I have a way of making all short answers long answers.
actually,
short
Rick
questions, long
coined
answers.
that.
Just
guy.
any long answer?
Yeah. Actually, my friend Jebediah is even worse, but Rick is a close number 2.
I'm a long talker.
And,
It's true.
And,
Yes.
after we get into, after we cover your question, what do you want to specifically talk about? Who's
The headlines on, I didn't see the PD, but Marin IJ and the Chronicle is real estate's on fire. I mean, I'm just.
PD had an
I'm
article
actually-
yesterday that
I'm
is up
actually tired to see-
24%.
Yeah,
That's Press Democrat, there we go.
25% in the Bay Area is what they're saying year over year, and it's the 5th or 6th straight month that it's been
Sixth.
year over
Okay.
year 20%.
Save
Yes.
all that. Okay, you ready?
Yeah.
Chicago.
And this time we're going to keep everything steady here. Welcome back to The Best of Investing. I'm Edward Brown, your host, along with Mark Hanf of Pacific Private Money, California's fastest growing private lender, Rick Warner of Keller Williams, one of the most bestest real estate agents. You like that?
That was awesome. Well thought out. That was good.
You
You
like
could
that?
say the largest if you wanted,
Okay, I could.
Yeah.
All right.
just to go back to the other caller.
And then and Jeremy Forcier of Guaranteed Rate. Okay, when we cut to the first commercial break, we asked this baseball trivia question. If a batter hits for the cycle, what is the minimum number of total bases?
I counted on my fingers and I got 10.
That is correct.
Nice.
Very good.
I have 10 fingers as well. How many do you have?
10.
Yeah.
I forgot to use my fingers, so I took off my shoes and sock, counted my toes. I came up with 9.
You should get that looked into.
It's a little creepy.
Just kidding. I got 11.
No wonder you have a limp.
All right, Mark, we received an email question for you. I've heard you say in the past that you usually don't provide second mortgages. Are there any circumstances wherein you might?
So Pacific Private Money is a hard money lender, also known as a private money lender. We make loans to real estate investors in the Bay Area. In fact, most of our loans these days are for people who are buying, fixing, and flipping, rental real estate or investment real estate in the Bay Area. It's still a very hot market, notwithstanding the fact that inventory is very tight. And we'll get into that in a little bit later in the show. But hard money used to be all about seconds. I mean, 10 years ago, that was the only loan a hard money lender really was making, because anybody could get a bank to loan them money in first
Sure.
position. Money was so loose and so easy in the early 2000s. So the market for hard money was either seconds or things like speculative land loans. And in fact, we're putting a fund together right now, a mortgage pool fund that many of our clients have asked us for because they've had such a difficult time getting into some of the individual trust deeds we're doing. But sometimes people say, well, I don't know about a mortgage fund because a lot of those guys went out of business when the market turned. Well, the fact of the matter is that most hard money mortgage pool funds in 2001, 2, 3, 4, 5, they were making seconds and land loans in that euphoria that was going on. And so it's a much different market today. So we can still do seconds, but I'll be honest with you, there's not a lot of demand from the investor side, from the lender side. The appetite for seconds has really diminished because you don't need, as an investor, as a private lender, you've got your choice of hundreds, if not thousands, of first position loan funding opportunities. The only reason to take a second is because it's either so well secured that there really is not that much relative risk, or the interest rate that it's paying is significantly higher. So let's say a first position loan pays 9% or 10%, a second position loan better pay 12 or 13, or there's no compelling reason to take that additional risk by funding a second. So I know borrowers don't like to hear that, particularly borrowers with equity and maybe a really low interest rate first position loan, and they've got a lot of equity and they go, oh, I don't want to pay off that 3 or 4% first, can I get a couple $100,000 second? Well, you can, and some lenders will do it, but it's just not the same hard money market as there
And
was.
you're seeing enough deal flow that you can provide
That's
good first
and
mortgages?
again, that's the reality of it is we have such good deal flow now, meaning the demand for capital is so high and the banks are not serving that demand with respect to real estate investors. They are with homeowners. Homeowners, my God, you don't need to use hard money at all, generally speaking, but for investment property, banks can't react quick enough because oftentimes you got to close quickly.
Yeah.
And that's the reason why hard money and private money is so popular right now, because we can close in 5 business days.
Yeah, it's a great. That's actually a great point. So I mentioned, we can close in 25 days, guaranteed.
That's actually fast.
That's
That's
very
very fast
fast
for-
on our side.
Yeah.
But we do, in fact, refer out a lot of private money of where people are like, look, I'm competing with a cash offer that has to, close in 8 days. I need to close in 7 days if
Yeah.
I want to get accepted on this property. So there's a lot of times where, paying that, quote unquote, higher interest rate and or fee up front is so worth it to
Yeah.
get the right property and is so nominal in the grand scheme of things, which is why Mark has such a great business.
Yeah, well, which is a good thing we have Rick here too, because he can just explain or show why there's multiple offers.
Yeah,
Well, we'll talk about that in a little
Yeah.
bit, but just to
Yeah.
Jeremy's point, I never get a loan request that allows me 25 days.
Right.
Never.
Right.
Every
Right,
loan
right.
request I get, and I get 5 or more a day, is can you close by Friday?
I love
And
it.
is it all because of competing against another?
It's all because, well, it's 2 things. One, these are guys that are making all cash offers, but they intend to use a hard money loan to close. But they're saying in the purchase contract, it's all cash, close in 2 weeks or less.
Wow.
Sometimes it's 10 business days, number one. Number two is maybe they intended to get bank financing and they realized when the clock was ticking and it's 5 minutes to midnight that they're never going to close conventionally, or maybe they went to another hard money lender and it fell out. I get a lot of fallout requests where it's like,
Right.
That's
I
great.
got $10,000 hard on this
Yeah.
on this purchase contract, and if I don't close by Friday, I'm going to lose it. Can you help me?
Yeah.
And the answer oftentimes is yes. It's not always yes. I mean, we're not miracle workers, but
Well,
with
you're
the right
not going to
application-
take undue risk
No.
just to get the deal.
Well, I mean, I
done.
can't write a check tomorrow if you call me today, but
Yeah,
but I could do it in
wouldn't-
3 days.
But
if
you
I need
could,
to.
but you wouldn't want to anyway, because you need to check out to make
Right.
sure that everything is, okay with title insurance
Yeah,
and all
there's
that.
fraud issues, and I can't play, fast and loose with investor capital. I mean, I got to do due diligence, but still, we can do due diligence very, very quickly. I mean, we can do a 72-hour, or 4-day funding.
Well, that's the thing I like about the hard money is that it's not like you have to go up 10 rungs of bureaucracy. I mean, I remember having an absolute slam dunk with my own house. This was years ago, and it wasn't my house. It was investment property, and it was an absolute slam dunk because I was a good borrower and everything was perfect, right? And I remember calling and going, "Gosh, it's been 60 days. What's going on?" And they go, "Well, congratulations, you've made it to the 7th level." I go, "How many levels are there?" "Well, there's 10." And you got to be kidding. I was thinking, well, good job for the hard money lenders.
I have a question for Mark. it's fascinating to me what you just said in regards to people making cash offers and then going and getting hard. We see that a lot in today's real estate market. If a realtor asks to, hey, can we see proof of funds? Is that something that your investors, or is that something that you can actually show when these people are making offers to make those offers stronger?
Like commitment letter?
That's a really interesting question, because here's the thing. When anybody calls me and says, hey, I need a proof of funds so I can submit this contract,
Right.
what they're really saying is, most of the time, is a pre-approval letter. And a pre-approval letter costs me nothing, and it's
Interesting.
not worth the
Interesting.
paper it's written on. I'm just saying, hey, I reviewed so-and-so's financial, and I hereby pre-approve him for a loan up to $500,000, signed blah, 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 broker. And what does that cost to do? But it's not a proof of funds. I almost never have seen a deal, at least from my perspective, the investment side, where a buyer couldn't get into contract because he didn't have the quote proof of funds.
That's
the
very
pre-approval
interesting to
letter
me.
almost always gets the contract accepted.
Huh. Very interesting.
Very interesting. Okay, here is our second trivia question. Again, the theme is baseball jargon. In baseball, what does the term twin killing mean? Don't touch that dial, because we'll be right back. Welcome back to The Best of Investing. I'm Edward Brown, your host, along with Mark Hanf, Rick Warner, and Jeremy Forcier. When we cut to the second commercial break, we asked this trivia question. The theme is baseball jargon. In baseball, what does the term twin killing mean? And it has nothing to do with the Minnesota Twins.
I have no idea.
I also do not know.
I don't know.
Really?
Yeah.
A double
Stumped.
play.
What?
A double play is
Really?
called a twin killing.
I think you made that up.
I was
Okay, I
gonna
made
say
it up.
something
I
totally
don't think
different.
anybody else knows what
All
that
right, Jeremy,
jargon is.
no radio and texting at the same time. It's
No one's texting.
ill-advised.
Yeah.
I'm not even touching my phone.
When we were cutting to break, you had a good question for Mark.
Well, I just wanted to talk to Mark about something that, from the investor side, that I think makes a lot of sense. Diversifying a portfolio. Obviously, a lot of people do that. They give you money, and then you give it out to investors. But you can use IRA money to do that too. And I think a lot of people
Borrowers, yeah.
don't know that, right?
A lot of hard money lenders and private lenders use investor capital that's from an IRA, from a self-directed IRA. That's really the caveat there, is if you have a self-directed IRA, and a self-directed IRA is one where you can basically choose where that money is being invested. You can actually buy real estate in a self-directed IRA. You can make loans on real estate, which is how people participate in my company with their IRAs. You can buy jewelry, you can buy gold, you can buy a lot of things. Whereas in traditional IRAs, you're usually limited to the stocks and bonds and other things that particular brokerage house offers you. So that's not self-direction. But self-directed IRA monies, one of the best ways that I know of to grow them is, in fact, through participation in either mortgage pools or individual trustee
Yeah, because
loans.
where else can you get a relatively secured
8%
safe-
minimum,
8%
really.
minimum, yeah.
I know that's my whole point, is that you have this high-flying stock market right now. By the way, you can take I think you can take, you can open up your own self-directed IRA with the IRA that you already have and roll some money into it. In other
Yes.
words, you don't have to have started with that.
And you can
So-
have multiple
Correct.
IRAs.
And,
Absolutely.
And we actually, one of our good advertisers is IRA
Services.
Trust Company
IRA
in San
Services, yeah,
Carlos.
here in the Bay
and
Area.
they're very, very reasonably priced.
Yeah.
You can put a bunch of different kinds of investments in there.
Yeah.
So,
Well, and that's why I mentioned it, because I've helped a bunch of clients, investors, purchase homes with their IRA money as investments.
yeah, and you can't just use that mutual funds
No,
custodian.
of
You
course
have to
not.
have a self-directed
I've
one.
even made it hard money loans to someone's IRA that was buying investment property.
Right.
So
Yeah.
try to think about that without your head like screwing sideways.
Yeah, so
No,
if people
it
check
makes
out,
sense, especially if you're because you can even flip properties with your IRA money
Yeah,
as well.
absolutely.
It's just that all the same money has to stay in the same. In other
Stay
words, you
in
can't
there, yeah.
commingle your funds. That's
Yeah.
the main deal.
Yeah, it's got to be, can't have prohibited transactions. It's got to be arm's length.
So Friday, I think every paper in the Bay Area had a headline either on the front page of the business section, and I don't know, I don't know about you, but I'm actually getting tired of reading these headlines. Bay Area real estate up 25% year over year, and it's weird because in past shows we've talked about this, but I know my house that I live in Novato has not gone up in value 25%.
How much
So,
do you think it has gone up?
maybe 10
Really?
from the bottom, 15 possibly. I don't.
I need to come over and reassess your house.
Well, but you know, they're talking about the median pricing. It's
Right.
not that they're saying that home prices have gained or appreciated in value year over year necessarily 25%. I think that's something that's misleading.
Well,
is that
some
a
might
median
have gone
home
up
sale-
40%, and some might have gone up 2%, right?
Well, there's a couple exactly. It is a little bit frustrating because then everybody's like, "Wait a minute! You told me a year ago my house was worth this much, and if it's up 25%, then it should be this much." And that's not always the case, or probably most of the time it's not the case because it is a median. And you know, you have a couple different factors in there. Number one being, you know, you're talking about all homes across the board. Well, I know, for example, in the northern, northern Marin, southern Sonoma County, and so forth, a big part of that 20+% is because we've had a lot more $1 million, $2 million, $3 million houses sell. Well, that skews the numbers considerably.
Oh,
That's one
okay.
thing, for example.
What about the East Bay? Anyone know what the statistics are there?
No, but
They're pretty amazing.
Yeah, I mean,
Yeah,
it's kind of the whole bay. In fact,
It's really the
but do you
same.
think it's 25%? I mean, really? I mean,
Yeah.
as a house, if it was worth, 500,000 at the a year ago, I wouldn't even say the low because even
620, it's up to 625?
yes.
Well, yeah, I'll tell you what. Even
Yes, I
in
do.
East Bay. So
Okay.
I was working with a client this morning in Benicia. Purchased the home 2 years ago, $168,000. Okay, real nice little house. Starter home, and met with her this morning. She was thinking about, I'm really thinking about maybe moving into something else and just selling my house. And we went through all the numbers, and she's going to list her house at $249, and it will probably sell for $275.
Wow.
So that's
way more than 25%.
What was that?
that's my
Double,
point.
right, yeah.
Is that
Okay.
yes? I think that
So
things
certain
are-
markets and certain acquisitions are
Okay,
actually
I'm
realizing that kind of
Well, let
appreciation.
me throw kind of a monkey wrench into this. What happens if you remodeled your house? I mean, that's not taken into consideration, right? I mean, if you have a $200,000 house and you put $80,000 into it, and then you make a profit, you sell for $400,000. Don't they just say, well, it went from 200 to 400,
Yes,
so you made 100%?
they do, but there's not enough of those to, I don't think, to skew
Okay.
the thing. I think that, like, we had one, Jeremy and I had one in this particular development that right at the beginning of this boom, we were able to get in for 310, and then he just called me the other day and said, hey, for me to refi, I need to have gone up 20%, or I need to have 20% equity so I can get rid of my MI. And so I said, well, what number
Mortgage
do you...
insurance.
Mortgage insurance, sorry. And so I said, well, what number do you need to be at? And he said 380. And I said, I just closed one in your neighborhood yesterday for 380, same exact house.
Oh. Okay.
And that was less than a year. So what's that? That's 70,000. There you go. That's whatever percentage that is.
19%.
20. Yeah, it's 19.
so the
20%.
Shoes and socks to figure that one out.
Yeah,
Okay.
yeah.
Okay.
But that was less than a year, and that was 20%.
So there's some real world examples of where we have seen, a house that you've done nothing to it except live in it has gone up in value
Right.
20, 25, maybe even more percent. I just find that amazing. So does that mean that the opportunities, if we didn't buy a house or someone didn't buy a house a year ago, or the opportunity is gone?
Sounds like the stock market, it's
I-
at
I-
an all-time high.
The opportunities are not gone. A reason being is that affordability continues to be the lowest it's been ever
Yeah.
for purchasing a home.
And
Also,
isn't that
and
really
we're-
the bottom line at the end of the day?
Yes.
is
Yes.
If you're buying a home to live in, it's not what you pay for it. Is
What does it cost you every month?
Right.
That's what it comes down
Is
to.
it in your budget, and can you do it?
Right.
That's a good question.
Right.
I mean,
So
that's
it's
a
going to
good
be
point.
driven by interest rates like we've talked about before in the show, and as long as interest rates continue to stay ridiculous, then things are going to continue
almost free.
to almost free.
Well,
Yeah, I
they
love
were
that.
going up for a
Almost
while.
free.
They were going up for a while, and then they popped back down, didn't they?
Yeah,
They did.
I mean,
Recently,
even
they've gone down.
even
Well,
when
but-
they were going up, though, I mean, you're talking 4% compared to 3.5%.
4%.
You know?
4%, that's an outrage.
I mean, when I got mine at 6% in 2006, I'm like, yeah, 6%. Are you kidding me? This is amazing.
Well, it's funny. Back in 1984, I remember getting
16.
No, hold on. It was I bought a condo that had industrial bond financing at 7 7/8 when interest rates were
That
like
was
13
unheard of.
Yeah, that's ridiculous,
It's like
yeah.
it was awesome.
Yeah,
7 7/8, and I was really happy.
you should have been.
I was
Did you keep that loan?
until I sold the house.
Okay, fair enough.
But it was assumable. Okay, we're going to cut to our third and final commercial break. Here's the trivia question. Again, baseball jargon. This one's an easy one.
Don't make it up this time. Don't make up this twin thing.
That's killer twin
I know,
towers.
kids.
Look it up on the internet.
Twinkle's what he
Not
said. He just
twinkle.
wanted
You
to get
believe
twinkle.
everything you see on the internet,
The
Edward?
tilted
Yeah, just
kilt.
like
Must have been true. It was on the internet.
That's right. Like the commercial. Remember the commercial with the lady,
yeah.
right? The suave French bonjour, the model. Okay. When a manager fills out his lineup card before a baseball game, where does he place his cleanup hitter? The first 3 callers with the correct. Now, see, I didn't make this up because you nodded your head. You know this.
Tough one.
Tough one.
Yeah.
Okay, the first 3 callers with the correct answer are going to win a free 3-day, 2-night stay.
In the bathroom. He gets pushed in the bathroom to clean
The
up.
cleanup hitter. The first 3 callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse. And we'll be right back. All right.
Indeed.
How much time? What do you guys want to cover the last segment, though?
What sounds good?
We're going to go down instead of up.
They also really good
on.
on. I just referred them like a $1.8 million.
Thank you.
Yeah.
Unfortunately.
Oh my God!
Winery type estate with vineyards on it and producing income.
I love
stuff.
You can't do that?
Once it's producing income, like a commercial loan,
Yeah.
can't
Okay.
do it.
What,
Yeah.
do we want to talk about before we go live?
Welcome back to The Best of Investing. I'm Edward Brown, your host, along with Mark Hanf of Pacific Private Money, Rick Warner of Keller Williams, and Jeremy Forcier of Guaranteed Rate. When we cut to the third and final commercial break, we ask this trivia question. Baseball jargon is the theme. When a manager fills out his lineup card before a baseball game, where does he place his cleanup hitter? And I did not make up this one. Answer. 4. That is correct.
As they say in golf.
For in the 4th position. Mark, you have it.
Mark says that a lot in golf, actually.
Actually, I don't play golf. That's the problem with being a workaholic, is that you don't have time to do those runs.
Wait. Jeremy and I work like 70 hours a week and we play golf all the time. So.
Come on.
Okay,
You can work on the
seriously,
golf
one
course.
time I was
Really?
on the little
Dang.
practice putting green, and a ball went right between my legs at about 1,000,000 miles a second.
And then you looked up and you saw it was Mark Hahn.
No,
trying.
no. But about 1.5 seconds later, I hear someone yell 4.
Yeah.
And I yell back and I go, next time, give me a warning.
And then he
Yeah.
picked up the ball and it said Pacific Private Money on it.
And that's how you and Mark met.
That's a good story.
That's
like
a good
that one?
story.
Yeah.
I didn't even know that
Listen,
about you
I
guys.
actually do have, to my credit, a hole-in-one, and not on a
You
mini
do?
golf. I do. And they say one comes every 37 and a half years. I got it when I was 19 years old. 165 yards, hit a 5-iron, hit it about 20 yards ahead of time, and just rolled it right up, right in
Oh my
the cup.
gosh.
And the people on the near the green who were coming the other way, guy jumps up and down. It's in the hole. It's in the hole.
Order
Are you
your
serious?
Edward Brown hole in the one sign up today.
Actually, one of our advertisers is Probe Golf, where if you listen to the commercial, it's really cool. He's got a certain kind of way that if you're within 4 to 5 feet of the hole, it makes the arc not as big. You have to listen to the commercial.
That didn't make any sense to me at all.
Okay.
I will listen to the commercial.
It's actually pretty
trickery.
cool. Okay, Mark, there was a couple of interesting loans you were working on.
Well, yeah, it's just we were talking about loans in the last segment and fast fundings and stuff, but I wanted to also tell Jeremy, because just so you know, most of the loans we do, of course, are for flippers and real estate investors, but we also have this niche market of bridge loans, because there's an awful lot of people
Really?
there's an awful lot of people who, like, for example, if they're got their existing home on the market and they've already identified the home they want to buy and they got to close that first before selling their
Right.
existing home, oftentimes they don't qualify to have
Correct.
two bank loans. And so we've done an awful lot of deals in the last 6 months where we've been able to do a purchase money loan. Now, the caveat is we can only go about to 70% most of the time, maybe
Wow.
75.
That's still amazing.
That's still pretty high.
So,
Yeah,
so the whole bridge loan thing has actually become a pretty hot market lately, and for some reason, a lot of hard money lenders are not touching anything owner-occ or consumer,
Right.
although it's perfectly legal because we have certain exemptions that we can operate under when it comes to that particular purchase money loan. And one of the caveats is the loan has to be for 1 year or less. So there has to be the ability of the homeowner to at least conventionally refi within 1 year. And another time that came in handy was there was a client who was 6 months away from his 3-year anniversary on his foreclosure. And so his mortgage broker was telling me, look, when that 3-year anniversary hits, I'm going to be able to get him a conventional loan, but he wants to buy this house now.
I got to tell you, I'm all ears right now. Like that is such a need in the marketplace right now for
Yeah,
homeowners
it is.
because the market's moving so fast. it's impossible to have a contingent offer. So what a contingent offer is you're making an offer on a house, but it's contingent upon you selling your house.
Yeah,
People do not want to accept those right now.
It goes to the bottom of the pile.
Yeah, it goes to the bottom of the pile. So, Mark, I want more information on that. Everyone that's listening, that is very unique, and that is amazing, and that could really be a good tool for all of you purchasers out there thinking about being a move-up buyer or maybe a right-size buyer. Rick taught me that, by the way. Right size, not downsize. So, maybe you're thinking about purchasing a new home and you're really concerned about where's the down payment going to come from when it's in my house. Mark, that's awesome. I really want to go deeper on that with you.
So bridge loans are great tools. The thing that a lot of folks can't stomach is that because it's a private money loan, we still charge private money rates and fees. Now,
Sure.
it's the cheapest of the private money because generally the borrower is rock solid. So
Totally.
it's not a distressed property and it's not a distressed borrower. So we can oftentimes get the points as low as 2, although 3 tends to be more common. And the rate, rather than 10, we can go to 9, sometimes even maybe 8.5. That starts to kind of hit the lower threshold of where private money rates tend to get stuck, kind of like
Well, what's interesting about that when you really think about the math too is that, if I'm a homeowner and I'm looking to purchase a home, it's the difference between buying the house I want at $500,000 right now and paying $15,000 in fees in order to get that bridge loan.
Exactly.
Or maybe I have to wait 90 days and then I got to pay $40,000 more in a purchase price. Now, that's speculative. I'm just telling you that right now the market's moving that fast.
Yeah, and along that line, it's exactly right. Like, what's the cost of that convenience? And there's also because the other alternative that we use for people is sell your house, move into a temporary rental, so that you have the cash, so that you're not contingent, right? That's the other alternative, and
which is costly.
Which is costly.
Hassle.
No, it's a total hassle.
It's
But
going to cost you $10,000 to move.
Exactly.
that's my whole point is that you can't do. Basically, when I have people right now that's like, I have some right-size buyers right now. They're like, well, what do we want to do? How can we do this? I'm like, either need to sell, or and rent, or that's it. Or we can get a rent, and hopefully you can get a rent back. That's the other thing we do a lot, is to get a rent back so they can stay in for a little while. But the bottom line is that is a really, really great alternative. Even though the cost is high, it's all in how you present it, which is the way
interesting you talk about the cost being high. I was talking to someone today who was part-time doing fixing and flipping. And so I said, oh, well, what kind of money are you using? He said, oh, well, I didn't have to use any outside money because I had a partner, and he basically shared the profits. So I figured out the numbers with him, and he ended up paying like over 25% interest on the money.
Because he had the partner who
Yeah.
only did the money, right?
Exactly.
Yeah.
It's like I said, you might want to think about calling Mark next time,
Yeah.
because
He's a cheaper partner.
That's right. Effectively,
Yeah.
it was a 50-50 deal, so he would have been in 50% LTV, and it would have been a lot cheaper to use hard money loan rather than having this quote partner where he didn't have to quote borrow.
There's hard money financing alternatives out there now where you can do a first and a second, and it's not quite 100% financing because the guy that does the second still wants you to come in with some skin in the game, but it's a lot cheaper than having an equity partner that you're splitting 50% of the profits with. So it's been a long time for that product to come back again, but in the last 12 months, that market has really developed, and right now I've got a ton of investors in my database who are happy to do a second behind one of my firsts for flippers.
Really?
Are you,
Okay,
and what do
'cause
you, like 90%? Like an 80-10-10?
They may even do like 100% of the acquisition price if you have the remodeling funds.
Yeah.
Or if you
Okay.
need the remodeling funds too, we could do like 90 to 95% of
Wow.
the entire project cost, including holding
And you could do that with your IRA.
Absolutely
Sure.
can. And
We should
see-
talk after the show.
You
Maybe
know what?
I'll-
I'm actually very excited.
Yeah.
The show has been more for me than it is
I
for
know,
anyone
this-
else. I'm
Just like
this
we
is
said,
awesome.
a bunch of guys
This
said,
is great.
This is really good. This is really good.
All right, guys, we are going to. This is a kind of fun show. I like this. Okay, here's our thoughts for the day. When I was a kid, my mom told me that the average person spends 9 years of their life in front of a television. So, of course, I responded, it would be a lot less if there weren't so many commercials. Yeah, that didn't work. She still made me do my homework instead. And I was teaching my daughter some driving tips and used the acronym SMOG. I don't know if you've heard of that, where it's signal, mirrors, over the shoulder, go. I don't know if you heard that. I'd never heard that before, but someone told me about it. So the way she was driving, I think she thinks it meant signal, move over. Get out of my way. No, she's actually a good driver. And with that, we're going to invite you to tune in next week to The Best of Investing. We're going to be giving away 9 more free vacations for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long. Good, that actually turned
That was a
out good.
great one. Hey, Mark.
Awesome,
good.
yes.
I'm Edward Brown, your host, along with Mark Hanf of Pacific Private Money. All right, we have an email here for Mark. It says, if banks loosen up their lending, will you still have enough product for your investors?
Good question. So at Pacific Private Money, we make hard money loans, also called private money loans, largely to the real estate investment community. And that private money lending has really thrived since 2008. It's been in a very strong growth curve due to the fact that banks who were so easy to get a loan from in the 2000s, all the way up until about 2006 or even 7 in some markets, but come 2008 and the whole financial meltdown in the fall of 2008, starting in 2009, they basically shut the spigot off, and they've really only been focusing on making consumer home loans since that time. So for the last 5 years, if you're looking to buy a house and you've got good credit, hey, there's the banks are lining up to loan you money. But if you're a real estate investor and you're trying to buy rental property, you want to take advantage of those low rates and buy a bunch of property using leverage, or if you want to buy, fix, and flip, for the most part, the banks are saying no, unless you're just such a gold bullion borrower that you've got so much capital and you don't need the money, you got a perfect credit score, and in which case, yes, you can get loans. But most of the people I've run into the last several years have been unable to get banks to make a loan, or the process is so arduous and takes so much time that it just doesn't make any sense for them.
It seems like even if the banks do loosen up, the advantage you still have is speed, because they're always going to have to get their own appraisal at and it takes 6 weeks, etc.
So here's what's happened since 2008. Even if the banks decide that they're going to go back into that broader section of the marketplace and start making loans to real estate investors again, what's not going to happen, and this is just, I am positive about this, they're just not going to be lending the way they were in 2004, 5, and 6. It's just, easy money is gone. The state, now, that doesn't mean that stated income products won't come back, but they've passed so many new regulations in the last 3 years, particularly with Dodd-Frank and all of that. They want to, the government has decided, long after the horses have left the barn, we're going to pass all these laws so that never happens again. Well, it's not going to happen again. The banks are not going to loosen their lending criteria as such that it will, be anywhere near what it was like in 2004, 5, and 6. So you're absolutely right. The banks have made it harder to borrow. They're going to continue to make it more difficult to borrow, particularly for real estate investors. So regardless of what happens, as I'm looking ahead and doing planning and projections for our company in the years ahead, I have no doubt that we're going to continue to have lots and lots of strong borrowers, lots of product, particularly when it comes to real estate investors who need to close quickly.
Okay. And what's the interest rate you're paying your investor clients now?
Well, I just came back from back-to-back private money lending conferences. I was gone last week, Thursday, Friday, and then Monday and Tuesday I was in Vegas at another lender conference, and I met a lot of private money, hard money lenders from around the country. And interestingly enough, the San Francisco Bay Area, and I kind of knew this before, but I just was able to reaffirm this talking to other guys from other parts of the country, we have the cheapest hard money in the country here in the Bay Area.
I'm going to guess that's because there's a lot of money that's prevalent.
That's exactly right. There's so much wealth in the San Francisco Bay Area, and so there's more money chasing the
Fewer deals.
quality fundable deals, and so just it's supply and demand, and so and the loans are larger. That's the other thing that drives it down too. So we'll do a $500,000 purchase loan on property that in Phoenix might be a $200,000 purchase loan, or
Sure.
or in other parts of the country a hard money loan of $30,000 to $50,000 is an average loan size. So they'll charge 5 points and
Well, of course,
15% for something like that.
Yeah,
they gotta-
because 30,000 times 5 points is still only $1,500, and you
Right.
still have to make it worth your while to do the loan.
So to answer your question, what's it costing now? So private money / hard money loan, and I'm using it interchangeably because private money and hard money is essentially the same thing in the way I use it. So 10 to 11% interest rate. Again, these are
That's what
short-term
that's what
loans.
you charge the borrower.
The borrower,
Okay.
right. So for a 6-month, 12-month, 18-month loan, the interest rate's likely to be somewhere between, let's just say on the low end, it could be as low as 9.5, depending on the loan to value, and as high as 11. And generally, most of the loans we write are falling in the 10 to 10.5% space, with points between 2 and 3, which I think is actually really good. It's still pricey. But gosh, just a few years ago, we were getting 4 or 5 points on every deal. So competition has driven the cost to get a hard money loan down.
And the rate that you pay your investor clients?
Our investor clients generally get 1% below the note rate, sometimes a 0.5%. It just kind of depends on how we frame the deal. So we've got investors who are earning anywhere from the low to mid 8% on their money fixed with payments monthly, all the way up to as much as 10%. So it's a pretty good spread. And again, the quality of the loans right now are higher than they've ever been. I'm working out a bunch of deals right now that I can't believe the quality of the borrowers. It's just they can't get the banks to close fast enough. That's usually the deal in a hot market, and we'll talk a little bit more about this in the coming segments, because there's a lot of articles about how hot the real estate market is right now. But one of the avenues of hotness, if I want to use a strange phrase here, is that to get a house today in this competitive marketplace, you need to be able to close quick. And
Yeah.
so if you're competing with an all-cash buyer and you want to use bank financing, and it takes you 30 days to close, well, the seller's probably going to go, you know what, I'm going to go with this guy that's going to close in 14 days. So we're doing a lot of loans for people who don't need to use hard money, but they're using it because they know we can close by next Friday if they have to.
And they can still eventually refinance it out with a conventional lender at some
Right.
point.
It makes the transaction itself, the cost of the house, pricier, but it's the difference between getting the house and not getting the house. So what's more important?
All right, and before we cut to our next commercial break, and afterward, I know you've got a couple of very interesting articles you want to cover.
Indeed.
I want to talk a little bit about the IRS. Holy smokes.
They've been in the news lately.
They did. They got a little bit of trouble. And the funny thing is that, they obviously went in, and I say obvious, they went after people, company, nonprofits, I think it mostly was, with the names, Tea Party or something. But then they also went after any organization that was trying to make sure that the Constitution stayed a Constitution. You know what I mean? And it's like, gosh, isn't that sort of what America's supposed to be about?
Yeah, well, Tea Party and Tea Party related groups, it's I guess they're not favorite in Washington today, given the balance of power right now in the Democrats. So
All right.
I know you and I tend to swing a little bit more on the conservative side of things, and particularly being independent business owners and ones who don't want to pay more than our fair share of taxes.
But wasn't that years ago that the leaning left liberal groups used to get all upset because theoretically the IRS and
the FBI were going after those liberal groups,
but
right?
see, it's okay if you go after the conservative ones.
Well, the pendulum swings both ways,
yes,
right?
it does. Okay, we're going to cut to our third and final commercial break. Here's the trivia question. Who played both Vinnie Barbarino and Vincent Vega? There's a lot of V's in there. The first 3 callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. And don't touch that dial, because we're going to finish up here on The Best of Investing. Welcome back to The Best of Investing. I'm Edward Brown, your host, along with Mark Hanf of Pacific Private Money. When we cut to the third commercial break, we asked this trivia question. Who played both Vinnie Barbarino and Vincent Vega?
Oh, that's an easy one. Johnny Travolta.
John Travolta, that is correct. Okay, Mark, you have a couple of very interesting articles you want to share with us.
Yeah, well, the economy is about the haves and have-nots. And what I mean by that is, you've got headlines about the real estate market, hot, home prices increasing. And then in this week's newspaper, there's also an article with a headline that says, discouraging news slows market. And it basically says that there's signs of a slowing economy, combined with some comments that the Federal Reserve officials made this week. And so they talked about, the article talks about there's plenty of discouraging news. Applications for unemployment rose last week, manufacturing slowed, Walmart stock went down after they warned that customers were spending less at stores. So now on the one hand, I don't like a superheated economy. I kind of like slow and steady growth. You want to try to avoid bubbles. I mean, we've had our share of bubbles in our last 15 years. And our generation here has experienced two of them. The real estate bubble and the tech bubble at the end of '99. And so, there is an article, notwithstanding the, discouraging news of other economic sectors, a headline in this week's Chronicle says, is real estate headed for another bubble? And so, subheadline, just a year since the housing market hit bottom after the biggest plunge in 8 decades, signs of excess are emerging.
Back to 2005 again?
Yeah, but and here's a gentleman quoted who's co-director for the Center of Economic and Policy Research in Washington. He's saying if prices keep going up at this rate for another 6 months, we will have a bubble and people will get hurt. Well, that's one man's opinion, but it's probably not the only person who feels that way.
Sure.
I mean, we've really seen, and this article is actually about nationwide. It's not just the Bay Area, because we've done some shows recently. We've talked about Bay Area home prices in some markets up 30, 40, maybe even 50% from the low, which is just
That's amazing.
Unbelievable.
Well, look at
But-
the stock market. The stock market went from the low of, 7,000 back in 2009?
So nationwide, March to March, home prices are up 11%, and that's the biggest gain since the height of the real estate boom in 2006, the biggest annual gain. So, it's a worry. It's nationally, they say existing home sales are still off about a third from their 2005 peak, and construction is still down. But I know here in the Bay Area, a lot of regions are at or near their 2006 levels. So it's pretty interesting what's going on in the market today.
Wow. Okay, thanks for sharing that. Any other exciting news to share? Got about 2 minutes to go.
Yep. The median home price in the Bay Area hit $510,000. We'll also close out the show with a little bit of real estate news. And eager Bay Area buyers propelled the region's median home price above $500,000 in April, its highest in almost 5 years. So again, the Bay Area is getting back to normal, I guess, whatever normal means. And
What is normal?
I don't know. The Bay Area median peaked at $665,000 in the summer of 2007. So that was generally considered the height of the market, $665,000 in 2007. So now we're at $510,000. So even though in some markets like the screaming hot San Francisco market or the Silicon Valley market, where some homes are now valued higher than they were actually at the height of the
Really?
the
Wow.
bubble. Yeah, it's amazing. Some markets barely got touched, and other parts of the Bay Area went down quite a bit. So, but median price, we're at $510,000. It's up 30% from a year ago. Now, we've talked about what median means. It doesn't mean the house you're living in right now is worth 30% more than it was a year ago. But the median price, where half the homes being sold are above that price and half the homes being sold are below that price, that valuation is now $510,000, and it's up 30%. And it's up just above March's price. It's up 17%. So real estate's only heading one direction right now. There's fears of a bubble. Stay tuned.
Well, that's what gets a little bit nerve-wracking, is if it goes up too fast. That's what happened in Silicon Valley.
Well, it's
And
not
things
sustainable.
crashed.
You know,
Exactly.
the tech bubble wasn't sustainable. The real estate bubble we suffered through in 07 and 08 was not sustainable.
But how do you stop it, though?
Well,
You know, how do you
We
stop
hope
people
in
from
this-
with the supply, with the demand side?
Well, you can't. As long as there's inexpensive money by the Fed, there's likely to be appreciation. But at some point in time, it's going to get beyond affordability, and then it's going to cap out.
Yeah, good point. Okay, we're going to close out the show here with our thoughts for the day. And it's interesting because we had mentioned about the IRS, and they kind of come into this thought for the day because we always think about the IRS, right?
Too often.
That's right. Well, remember the Occupy protests? I saw an IRS agent with a sign that said, "Corporations are people too." Now, it turns out that, according to the IRS, the definition of people includes corporations. The
Yes.
distinction is that human beings are individuals as opposed to corporations. So,
Chew on that.
yeah, chew on that. And I tell you, I deal with a tough bank. I went to sign some loan papers. You know, we're talking about how hard it is to get a loan.
Yeah.
And they asked me what size shoe I wear. And I said, why? Why do you need to know that? They go, well, hey, in case you don't pay off the loan, we need to know how much cement we're going to need. Oh, that's a scary one. Don't go to that bank. All right, tune in next week to The Best of Investing. We're going to be giving away 9 more free vacations for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown. We're wishing you the best of investing. So long.